So you have fee-based wealth managers that that charge purely a percentage of the assets under management to manage a portfolio. And one of the benefits of that is that it monetarily aligns the incentives of the portfolio manager or advisor. They're really just a portfolio manager at that point, with the objectives of the client, right? Because if the client's account value increases, then the income to the advisor increases, and therefore they're both moving in the same direction. They want to move in the same direction. One of the problems with that, though, is that it is still incentivizing that advisor purely to look at the investment portfolio, right? Even if they may say, well, I'm also going to help you with your estate planning, your business succession planning, that kind of thing. They're not monetarily incentivized to do so. All they're incentivized to do is look at your investment portfolio and make it grow. So why would they spend their time doing anything other than that, right? There's another segment of the fee-based wealth management area that will do things for a fixed planning fee, right? So a fixed planning fee, meaning that they say, well, I'm going to develop a financial plan for you. It will look at all these different aspects, some of the things I mentioned earlier, like estate planning and business succession and fringe benefits and investment planning, right? And we're going to develop a plan for you, and you're going to get a document. And if you'd like, maybe we can help you implement this if you'd like to do it for us, right? And they'll do that for a flat fee, and that would typically be half paid up front, half paid on the back end. And that may be several $1,000s, right, to develop that plan. So again, this is a step in the right direction, right? But there are still incentive problems there, because now you've got, even though they're incentivized to develop the plan for you, right? Where is their incentive to implement it for you on an ongoing basis, continuously into the future, to make sure it actually happens? The next evolution of this, I believe, is what's called retainer fee wealth management, or retainer fee financial planning, in which you pay your professional, right, to be that fiduciary for you, right, to look at all the different aspects of your planning and to help you implement it. But you do that not for a one-time fixed fee, but for an ongoing, smaller, monthly or quarterly fee. And one of the reasons this is a little bit better in terms of the incentive problem is that, okay, they're not being paid for any one area in particular. They're not being paid on a commission basis. They're not trying to sell you a particular product or get you to do a particular transaction, but they are on the hook, right, to continuously provide you with advice-based solutions, right, and not necessarily product-based solutions. So they can be more objective. They can look at all the different areas of your life, and not focus on just one thing, the thing that's going to make them more money, right? And they can do that in such a way that, or they're forced to do that in such a way that they have to continuously do it for you, because if they stop doing it, you're going to stop paying them. It's as simple as that, right? Based on all the different models that are out there, we found that seems to be the closest alignment of client objectives with professionals' goals.